Good morning and welcome to the latest Flexible Space Association Workspace Wisdom webinar. I'm Jane Sartin, Executive Director of Flexa, and I'm joined today by Inga Taylor, who's CEO of Opstech, which is a service provider member of the association. And she's going to talk to us today about MLR compliance, which I know is a topic with a lot of understandable interest in the sector. She will also be able to take questions at the end. So if you've got any questions, please add them to the chat box, but we'll pick them all up at the end of the session. So I'm going to get Inga's slides up and leave you with her.
Hello, good morning, everybody, and thanks for joining the session. I'm very aware that some of you may know more than others, so I've tried to make this a little bit different from previous things and give you some background about MLR. But just to start, for clarity, it's about the money laundering regulations and compliance for a flexible workspace. Sorry, there we go. So I thought I'd start with just explaining the current landscape. Traditionally, flexible workspace providers providing office space haven't been regulated and haven't been required to register with HMRC to become a trust and services company provider. But that's changing, and it's changing because the world is changing and there's more of a risk perceived or real out in the marketplace. So these are some of the reasons that we think that flexible workspace providers as a whole are being seen as higher risk in the business sector. Higher turnover of customers because we've got short-term license agreements in the main for now. The short-term contracts and ease of onboarding. There's a perception that we could attract more international customers and they're harder to validate and verify. And also we may enable shell companies to occupy our spaces. These are just the opinions of the world. They're not necessarily my opinions, but it just is a view of where the legislation is going. And on that, there are a couple of things in the pipeline. So the government's fraud strategy for 2026 to 2029 has allocated £250 million to combating fraud and anti-money laundering. And the expectation is that that's going to be some additional onus on businesses to help identify fraudulent companies. The other part of legislation is really the Home Office, coming from the Home Office, who've commenced consultations to look at the benefits of sharing information to prevent anti-money laundering within the private sector. That's still in consultation. We don't know how long that's going to take and what's going to come out of it, but they're just the background of where we're at with compliance in this sector. I just wanted to start with go on with compliance is not the bad guy here. The bad guys really are the bad guys. The point of compliance is to help protect us from the bad guys that are setting up an illegitimate business in the guise of a legitimate business. So compliance is really just an extension of know your customer, and it really is you should know who's in your office space, check the nature of their business, and just check out their finances and their directors. And it's a good way of working anyway. You want to know who's in your business. There's been something every day on the news this week. AI or fraud and companies masquerading as something else, or funds being put through legitimate businesses that are not legitimate. The world of AI and fake IDs and fake fraud is just becoming bigger and bigger. So being able to combat it. Basically, the criminals are getting more and more sophisticated, and they still are the bad guys. But following a compliance strategy and a compliance plan will help you to mitigate against those risks. Now we're in a fortunate environment where there are more and more electronic tools that are a reasonably cost-effective solution to de-risk it. When I first started looking at compliance, we used to have to Google people, companies, look things up on Companies House, and it's much easier now to using some of these electronic tools. But those other methods are still of benefit to do your broader due diligence. The theme here is really that we believe changing your mindset about compliance will help you to get the most out of it. It really will protect your business. And here are some of the things that you could benefit from. Your brand could be more protected, because you're not going to have fraudulent companies. We've seen news stories when somebody's up on the telly because they've been in a dodgy company in the building. We don't want any of our members at Flexa being in that situation. Stronger credibility, easier banking relationships, better understanding of your risks. Really, there are some providers that are doing more compliance checks, and if we all keep to the same standard, then you should be better protected. The list is all here. The slides will be available at the end so you can have them, but we really believe it's a foundation for growth, and the discipline and structure that you put in place will benefit you and your teams, not just in their business working life, but also in their own home life, and making decisions on who they do business with. Compliance really does protect your business. Companies that treat compliance as a tick box tend to struggle, and those that really embrace it and implement it within their culture and day-to-day practice really are protected and see the benefits. Our key words for this are be aware, be alert, and take action. The more you understand about the regulations and the risk, you're observant to the behavior and patterns of your clients and what might seem out of the norm, and the actions that you take to prevent that will really protect you. Compliance is the good guy. It is your friend. The bad guys are still the bad guys. Being aware is really just being informed. There is a lot of legislation around this sector. This is the wordiest slide I have. We've put some additional slides at the end of this slide deck that will give you more information on some of these points, because and just help to point you out. But on here, the National Risk Assessment changed last year. It just reviewed the countries that are at risk, the finances, and the different types of threats that we're experiencing. It is that there's more detail listed below, but it really is worth understanding that so that you can review your own risk assessment and decide what you feel comfortable with. There are times when I've thought, actually, if I can't evaluate a company in another country, then I'm not sure that I want to accept it, or if the beneficial owners are abroad, or you just have to set your own guides in your own risk assessment for what you feel that you've got the time and ability to review and monitor. The guidance for trust companies and service providers have not changed fundamentally for a number of years. That we are thinking is going to change, and it will just be more about due diligence. Actually, there's perhaps some simplification of the process, but it is just to really protect us. And it is because the environment that we all live and work in has got threats from other sources. There are enhanced due diligence on financial elements and beneficial owners. So there's a few changes coming. There's no date yet. Obviously, the government is going through its own changes at the moment, so we don't know when these things may come out, but we are expecting some changes. One of the things I just wanted to, one of the things I just wanted to go through was we've got asked a lot about Google verification. There are more and more virtual office companies that seem to be asking the operators that they're in, that they have a virtual office with, if they can take a video of them coming up of the building and put a sign on the office. Google is trying to verify that businesses are real, but proving to them that they have an office in your building when they don't have a physical office in your building is helping to legitimize a business which isn't there. We had one instance where there was a kitchen company manufacturer that had taken a virtual office in another building to get their correspondence because they didn't want it all sent to their workshop. If they'd had a registered address at their workshop and were taking a video there of the kitchen cabinets being made, I think that would have been a better verification than using it at a virtual office, given the nature of business. So this is just one to be mindful of. Don't know if you've been requested for it, but please do not assist a virtual office client with proving that they have an office in your building, because they don't have an office in your building. That leads me on to being alert. Alert to suspicious activity. Suspicious activity is hard to define at times, and it's really important to get to know the norm of your clients and what they do. And it's really anything that's outside of the norm for your clients. It could be the number of visitors that they have, the frequency that they're in the office, the amount of posts that they're either receiving or sending, the churn in staff, the time it takes them to pay their invoices, or if they're paying part payments or paying late or paying from different accounts, all sorts of things that are different to what they had previously doing for the last few weeks and months may be a sign that you just need to investigate that something's going on. It is hard to prove. It won't stand out as obvious. You're not going to overhear a conversation that will make it clear that they're running a perhaps not legitimate business from your office. So just do be alert and mindful. We've got a full list of things that could be considered suspicious at a time of a client signing up, and that could be an office client as well as a virtual, and when they're working with you within the building. So you'll be able to see that list and go through it after this session. Finally, it's really important that as the action, you review and update your policies and procedures. They must be relevant and they must be current. The policy doesn't have to be overcomplicated. It doesn't have to be hundreds of pages, but it has to, you have to understand your own risk and exposure as a business as to where companies might be coming in. And then you need to be able to take action and put that in a policy and include the steps of how you're going to manage that and mitigate your risk so that you don't, that they're not onerous on the team, and so that the team can follow them. Monitoring that your people are aware and doing what they're supposed to do is a key part of the requirement. It's one of the factors that HMRC require you to prove that you are doing it. So that includes auditing some of your own customer files, but as well just that your team's understanding and processes are there. I tend to think if people haven't asked any questions about who's in the building or a client or something, then it might make me question, do they really understand what the compliance element is all about and what they're doing? Do they understand the risks? Do they understand the why we're doing it? And it's not just a job to follow the process. I think it can just be missed sometimes as to the benefits to the business as to why we're doing it. It is normal for people to just carry out a check, and if they're engaged in the process, they should be asking questions of the nominated officer or the person, their manager. Training the teams and providing refresher training every time there's a change in the regulations or within a time period. HMRC does have some guidance that really you should do it every year or every 2 years, and whatever you state in your policy, you need to show that you've got the training records to do it. And people need to understand the importance of it. We all do fire warden training, and we all check that out, but and I have to do that annually, and first aid training. So it's the same thing with compliance training. It needs to be a recurring agenda item in your plan for the business for the year. As we said, there are a number of tools and guidance. Flexa has the Flexa Compliance Forum, which many of you are probably members of, and it meets twice a year in person, and it has other online sessions. There are other businesses that support around compliance, and HMRC and Trading Standards also attend the Compliance Forum sessions. So it's a good meeting to attend if you've got some questions or issues. The online marketplace for software is becoming stronger. There are some really good tools that can help do personal checks, company checks, and really validate the ID of a person, so you're not on your own doing it anymore. It also can speed the process. When I started in compliance, we were having to ask people to come in face-to-face into the buildings and with copies of their passports. Certainly in those days, if somebody had an international passport or had documentation that I wasn't so sure of, I felt much more the pressure of the responsibility of making the right decision on me. But now some of these tools not only make it faster, but they actually are more rigid and more secure. It doesn't mean that you should not take a look and be involved and be engaged in the process. When you get the reports back from these systems, you should absolutely still review it. They will be red, amber, green. Probably the amber ones are the ones that you need to spend the most time looking at, because you need to really see why it's suggested that there could be a risk in there. If you are going to accept such clients or reject such clients, it's really important that you document it and you document the process, so that you might put them on additional monitoring. You might want to have a look every quarter to just check that if anything had changed with the company, and you should state why. If you do at any point, especially in the onboarding, feel that something is suspicious, you should report it. You can report it as a Flexer alert, or you could report it as a suspicious activity report to the NCA. The NCA website is available for everybody to use. You do need to register with it, but you can upload a SAR. If you've got a document as part of your own process that really helps to take your teams through the reasons why they think they're suspicious. I've got an example that might help to illustrate this. One of the operators that I work with had a client move in. It was actually just to a 1-2 person office, so a small office in the building. They actually do some checks, some AML checks, anti-money laundering checks on using an electronic system on the business and get some forms of ID. And they had done this when the customer had moved in. But there were some refurbishment works going on in the building. They were upgrading the lighting, and the building manager went into the client's office, and the office had no furniture, looked completely unused. So this office was sold with no furniture because the client said they had their own furniture and they wanted to bring it in. The building manager then called the client, and they were in Spain. Now, that in itself is not untoward, but it just was another sort of hit on the radar of, what do we need to do about this? The conversation was had with the client. They said that they didn't realize their team hadn't been in, which made us go back and check the Wi-Fi stats to see whether anybody from that company had actually logged in the last month. And they hadn't. So following a discussion with the nominated officer and the finance team of that company, it was decided that we would log a SAR report through the NCA. In this instance, the NCA actually came back and said they found no evidence of illegal behaviour and to just proceed. The client then subsequently did bring furniture in, has moved to a larger office within the building, and everything seemed fine. But I think you would agree that seems slightly odd to have been paying for an office for 3 months and not to have been there. So that's just one example of it. I think the other important thing that I would like people to consider when they take it away is there are the regulations, and there are some absolute black and white elements in there, but you have to apply them to your own business. If you feel that you do not want to take a customer that's business isn't registered in the UK because your risk is you feel you can't verify them well enough and you don't know how to check their documents, that's okay. You're able to do that, and you need to state that in your risk assessment. If there's a scenario where a beneficial owner isn't in the UK, and I again saw this recently. One of the companies that I've worked for previously, the original founder has been living the last 4 years outside of the UK. He still is the director of 3 or 4 businesses in the UK, and his sons are now day-to-day running those businesses in the UK, but he's still listed as a beneficial owner, not resident in the UK. Now, that happens to be a situation where I know the person involved, and if I looked back over their last 30 years of residence, they are residing in the UK. So in that scenario, I would probably go with that because they're not the only beneficial owner of the business. So they're just a couple of examples of where you have to set your own risk management level, and your policies and procedures need to adhere to that. So the message is be aware, be informed, join the Flexer compliance sessions, read the news articles that come out, be alert, and know what is suspicious activity, know what the norm is for your customers, know what they need to do, and then take action. And that now is the final element from me. So I'm happy to take any questions.
Thank you very much, Inga. Lots of really helpful information packed in there. And as you said, probably quite a number of people on watching now are members of the Flex Compliance Forum. But I would say if you're not and are interested in joining, please do get in touch with us. As Inga said, we have 2 of our meetings are held in person in London each year, but then we have 2 online. The next meeting is in early July online, and obviously can be much more open. So if you're working for a Flexa company and aren't currently part of that, but I'm sure if you're watching this have an interest in compliance, then you'd be very welcome to join. So let's just take a look at, we've got a couple of questions in so far, and I'll just leave your details on the screen for a second, Inga, so that people can take those down if they want to. Just perhaps a question from me to start with, as something that's come up a fair bit, including at those compliance forum meetings. Quite a number of serviced offices will have accountants or perhaps similar in their buildings, and their clients want to use the address to register with Companies House. Is that allowed?
Yes, the accountant should have their own registration with HMRC. So you should be able to ask them for their own MLR number, and you could ask them for a copy of their policy and for their procedures and for their due diligence, just so that you know that they are following the process. The important thing with it is that I've seen some companies that they might be providing that service for 30, 40 other businesses. So there's an awful lot of post that comes in for under the umbrella of the accountancy firm. You need to make sure that they are providing you with an up-to-date list, either on a monthly basis or when that list changes. We would really recommend that this accountant is not a virtual customer themselves, but they are an office customer, so that you have your own face-to-face contact with them and that you can see what they're doing and understand, and you get an impression of that is what they're doing. And there are some operators that may charge for that service to provide the additional mail handling facilities that they're doing, but it's something that you just need to monitor. I would definitely document it in their license agreement or put an addendum just to say that you note it and to put the MLR number in it. Ultimately, they are accountable under their own registration to HMRC, but you will be handling mail on their behalf, so you do have the ability to get their policy and their details from them.
Okay, thank you. Yes, this came up recently at one of our city roundtable meetings, and I think what came out of that was most people do charge a fee for each of those clients of the client as well, but not everybody. I think the majority in the room at that point certainly did. Let's just bring us back onto the screen. We've got a few questions in now. Please do keep adding questions if you have one. So is video certification of ID documents compliant?
If somebody was on a Teams call or a video call with you, I would say that's not compliant. You can't see the passport well enough. You can't verify it. You can't check it. You can't feel the quality of the paper or the driving license. I've seen a lot of fake driving licenses in my time. So a video ID is not acceptable. If you're using electronic software and they are sending a link that the person uploads a photo to and uploads their document, that is acceptable.
Okay. So there's a question here which I'm not certain whether it links into the Google situation that you talked about. So virtual inquiries where they've asked if they can take a picture of the external building, and whether this could create a false perception.
My view on this is I wouldn't let them. I mean, obviously you don't know whether somebody has done that. There will be people that might do that don't ask permission, and that's a tricky area. But the ones that ask you, I would say, you know, for what reason, for what cause, because it is likely to be for that. I don't think that on its own would actually qualify them for the Google Verify tick, but it's, yeah, I just think there's no reason. They're not based in the building. They shouldn't really advertise the building.
Okay. Is there any information from HMRC that can be shared with office clients regarding the changes to the compliance that are coming into play? Is that something that HMRC have done as far as you're aware, or doing?
I don't believe, I wouldn't feel confident sharing anything now. We'd need to ask HMRC if they're, how far down they are the publishing any changes that are coming. I think if it's going back to office clients, really it's about you assessing your own risk. And there are a lot of operators that still do check all their office clients or check beneficial owners, whether that's documented and more formal, whether it's more informal. It's really a form of know your customer and KYC. We believe that the changes are going to be more about in which instances you need to do more due diligence. It's identifying risks. You know, at the end of the day, compliance is about trying to help you protect you from fraud, and then to identify the businesses that are perhaps behaving illegitimately within your space under a legitimate business. So if you're allowed to take any checks. If you've got customers pushing back, which might be what this is about, being requested for information, I would look at them in further detail, in all honesty, because I would see, why are you pushing back? You know, in most instances, we have to provide ID if we're taking out finance or the accreditations to get a mortgage, to open a bank account. You need ID. You need to provide identification and verification of who you are. The same applies to a business, and it's not an abnormal request. So if you are getting pushback, and that's where this question is coming from, then I would dig further.
It's suspicious in itself, potentially, yes, or at least a cause for asking a few more questions, maybe. Yeah, I mean, I think we've had similar questions in terms of the changes to business rates, where there's information they can point their clients to. It's difficult, isn't it? And often what government provides is quite technical details on these sorts of things.
Very dry.
Yeah, yes. So next question. We have licensees who register multiple companies on Companies House. What potential issues could arise?
I'm not sure I completely understand the question, but if this is one business that then wants to receive post under a number of different businesses in the office, I would, if it was me personally, I would look into each and every business that was there, because if you only have a license agreement to provide an office space or a service to one company, you've got a contract with that company. To then receive post for 5-10 other businesses is not, you don't have a contract to provide that service. If the business isn't themselves a trust and services company provider that is like an accountant that's registered for it, then it would have to, it's a complex question. You'd have to look at it as a case in point and see who it was, how many businesses the directors had. I would probably also go and check out, do they all have websites? How is it structured? Without knowing more exact details. So do get in touch with us if you want to afterwards.
Okay. Now, is there a list of sources or newsletters that would be helpful for us to keep up to date with changes? Now, as Inga referenced, and I talked about a bit, the Flex Compliance Forum, that's certainly one of the things that is covered there. And we have representatives from HMRC, Companies House, and others who do. That's one of the particular things of those meetings. It's providing those kind of updates. And then we do share that those sorts of key things in our member newsletter as well, and to our people that we're particularly in contact with on compliance matters. Inga, is there anywhere that you'd suggest as a sort of source?
No, because it is tricky. You know, the guidance in itself is a huge document, and to read through it, and the National Risk Assessment that's been re-released is a huge document. So, and all of these documents or guidance have to be taken in the context of your own business. So, newsletters can say that something has changed, but they're not necessarily going to be able to say how that relates and what you should do within your business following it. So it is tricky. HMRC will publish some changes, but I actually maybe need to look into where the links are, and we could follow that up to people on the call where there might be further links.
Yeah, and we have a document in the closed area of our website for members on compliance matters, which Opstech produced. I suspect, thinking about it, it probably is going to need a bit of an update again, but that's a fairly comprehensive document for Flexa members there. So next question, how should we approach review general feedback or information from external sources and other clients within the building? For example, where an existing client flags a bad historic experience with someone new to our building. Quite a complex scenario,
Yeah.
I think.
So if you have a client that has, I don't know if it's caused offence or done something more fundamentally wrong to another client, but I mean, again, each case needs to be reviewed in its own context. If it's inappropriate behaviour, then you've got to take the action that's appropriate for that to protect the well-being of the other occupiers in the building. If you think there's some financial mistrading going on, or there's some deliveries, there's so many. Again, I'm not too sure what the context of that is. You always have the right to say no to a client. I should have said that earlier. And you can refuse clients office space and as a virtual. You're perfectly within your rights to do that. You can also, I'm sure your license agreements or your terms and conditions gives you the right to serve notice to a client. So if a client is not following what you feel is a reasonable code of conduct and behaviour, or is something bigger and more suspicious, then you can serve notice to them to protect the greater, occupancy of the building.
Yeah, I think that's an important point to remember. So for persons with significant control based abroad or even not in London, is receiving copies of ID certified by a notary sufficient?
It could be if you can verify that notary. So if it's somebody, say, in Spain, and that you can check out that notary is, I mean, I would always look up the website of that notary. But again, this is a scenario where you might feel, I'm not sure if I can verify or validate that, and so I don't feel comfortable doing it. Some of the electronic software tools on the market now do have inter-country databases, and they can actually verify the information of people that hold a foreign passport or provide other forms of ID. It's a little bit more expensive for those checks. It might be £15 to £20, but if you're going to take business for somebody, that might be seen as a cost that's, and these costs I'm not exactly the expert on the costs, but a check for a smaller person might be £3 to £5. For a UK company, it's a bit more for external. But I would say, if you don't feel that you can confidently verify that notary and that is a legal statement, you don't have to accept that client.
Okay. And then another question on a similar topic. Should verification also be carried out for hot desking or fixed desk occupiers?
Where you feel it's appropriate, yes. So if you feel that there is a slight risk, if depending on the nature of business or the times you see the client, there are some people that think that HMRC is likely to go down that route. I think the biggest thing with compliance, you're not mandated to currently, so you don't have to under the regulations now. But if you feel that what the customer has told you and how they are behaving or seeming to work within the space means that you feel you want to do a bit more due diligence on them, then it's a good thing. And there are some operators that would do that as standard because it's their policy that they just verify the ID at least of the person. So, yeah.
And then trying to sort of group together these ID verification questions. This comes up a lot in terms of software that can be used for verifying. This is specifically IDs abroad. I don't know whether you want to name any names on this, Inga, or certainly there's a lot out there.
It's something that we review periodically at Opstech, because we've seen new entrants come onto the market, and there's an awful lot of ID verification that specialises in estate agents. So anybody renting a property, they have to do their own ID. It's slightly different for us because we need to verify the companies as well as the individuals. There is one company that we tend to go to because on balance, we think the software, ease of use, price point and general features and functions is good. There are several out there. And the other company that we found that we liked was acquired by the first company. So I mean, Jane, is it all right for me to mention names of businesses, or is that?
Yes, I mean, yeah, I'm happy for you to do that.
So the company that we tend to find time and time again provides a good service, but we've started to work with a team there, is Smart Search. They bought another company that was very strong in the electronic software version of it called Credus that they're just incorporating. And a lot of these, a lot of the companies do have APIs so that you could integrate some of the checks with your CRM or with your back-end office management system. There's a cost to that. So it depends how many checks you're doing, how valuable, if that's worth you spending your money in that way.
And I've just someone's added a comment on notaries, so I'll just leave that there for people to read, adding on to what Inga said. So looking at other questions. Now our software is not being very helpful in allowing me to release them. There we go. Right. I've received posts from a business that are not with us after seeing they recently applied through Companies House that they are at our address. They notified Companies House that are not a business there. Is there anything else that they need to do?
Return the post to sender. Just return the post to sender, not known at this address. Okay. I think that's all you would need to do on that.
Is there less risk associated with serviced office clients who don't use the registered address of the building compared to the serviced office clients who do?
Not necessarily is the honest answer. You still would, it's still good practice to know who's in your building. Are they trading, doing what they say they're doing? Do they have a website? Are they paying from the bank account that matches the name that their license agreement is in? These are things that are just about know your customer and suspicious activity. A company could still be carrying out business activities that are not entirely above board. The current changes that we're expecting, whereas we used to talk about boiler rooms or other companies that would perhaps wine investments or things that were often seen to be more risky, businesses that are working now in some cryptocurrency or tech basis, not all of them, but it's really hard to work out, if somebody is, it can be hard to work out if somebody is legitimate, but you just need to do your own checks that you feel manages your own risk of who's in the building. Those of you that have been in the sector a long time would have been aware of companies that at times would come in, sign up, do a moonlight flit and leave and go and sign up somewhere else. That there are some bad practices of companies. So whatever you do to protect yourself is a good thing, in my view.
Okay. At the moment, what level of Know Your Customer would you recommend as a minimum requirement for licensees which physically occupy an office, proof of address, etc.?
I think all of that is a good activity. I would say it also depends on where your office is. Are you in a high risk area? Are you in a low risk area? That's not always the truth of it. What's the general makeup of your customers? I often find that some of the buildings have a particular client type or a sector that they're more akin to than others. There's no harm in checking the directors and beneficial owners, and proof of address is perhaps slightly less important because their post is going to be given to them on site. But certainly, if you checking the identity of the person that's going to sign the license agreement to make sure that they are who they say they are, I would say is a minimum that you should check.
Yeah, and then linked to that, which is probably a problem that many of us have just in day-to-day life, increasingly finding it difficult to obtain traditional proof of address documents because there's no longer paper bills being received for utilities, etc. Are internet bank statements or electronic utility bills now generally accepted?
So currently, no, I don't believe they are officially according to the guidance. This is actually where some of the electronic software can help. So if you've got a mobile phone contract or a water bill or something at that address and that account, they verify that because they can see the records of the back end. It is still possible to falsify documents. So I because I know that I'm likely to be asked for a hard copy, my council tax always comes in a paper copy. You know, there are some documents that will always still come in a paper copy. And even when companies try and move you onto electronics, you have the option. My TV license came through yesterday and it said I could still get it in a paper format if I wanted, or I could do it electronically. So I think it's also reasonable that we all still have a paper copy of something in this day and age.
Okay. This is a question about our own guidance. Doesn't Flex's AMLR guidance suggest that proof of address is required for beneficial owners?
It 100% is for virtual offices. If you're talking about office clients, then it's based on your risk of the office clients. But for virtual offices, yes, you need to have it because you are forwarding post or receiving post on their behalf. It's actually, I know Siobhan that works with me would say technically in a flexible workspace, we are still passing post on to office clients, but it's not deemed as high a risk in that scenario. But if you are collecting mail and forwarding it on to another address, you absolutely need to prove that address. One small thing on that, if you are ever asked to courier documents to a virtual office's address, they cannot book the courier because you don't know where that courier is actually taking the post. If they want the post couriered to them, you need to arrange the courier and know that the address that it's being sent to is the address that you have on file.
Lots of verification questions here. Is just ID verification sufficient for compliance, or is there another key element or list to check?
I suppose it depends in what use case of compliance, because if you were checking, you need to check the company if the person is a member of a company. So you can look them up on Companies House. Now that Companies House has their own verify scheme, which is straightforward but complex enough. I think it's rigid enough, having gone through it myself. So you know that somebody is verified on there. That in itself is not evidence that somebody is okay. But checking out the company, looking at the company records on Companies House is a good thing to do. You know, are they trading? If you've got a sole trader, the only real thing you will have is to be able to check their ID. And again, if they're bringing it in person, you make sure you touch and feel it. That's the best thing about it. If you're using the softwares, it de-risks it a little bit for you.
And someone's commented they have video call with a client without blurred background, etc., to verify identity against documents that have been certified as a true record of the individual. Is that something that you can?
I don't think that is a valid proof of ID at all. I wouldn't accept that for me.
Yeah. Okay. Okay, we've got a couple more questions still in.
Just on that last one again, if somebody's certified it, you've got to check who's certified it. So what have they written on it and what have they certified? And actually, that is one instance where we uncovered with somebody a client that we thought was suspicious, because it's very rare now, I think, or it's rarer to get a notary or a legal document certified ID, and we looked up on Google Maps and Google Earth the address of the solicitors that was quoted, and looked for the solicitor's website, and we decided that we were not going to accept that ID.
Right. Yeah. Okay, I think we will draw to a close shortly, but just do we need to hold a hard copy of the customer's agreement, or is having this on our compliance shared drive sufficient?
HMRC do accept now that documents are held on a shared drive. In many ways, they're more secure, actually, because when we had them in paper folders, that is customer information. You know, again, when I started in compliance, we used to take photocopies of people's passports and have them in a client file. That actually fills me with a bit of dread now, to think that if somebody could get in, they could see the copies of all of these. So on an electronic file, if you are storing things electronically, I would store them in a folder dated with the year they signed up, so that you always know, potentially even with the months, so that if you're wanting to audit your files and go back through, there's still some structure to it.
And then just to add, someone's added the comment about RPO7 forms to request that addresses that are not actually linked to buildings are removed. And I think this is something that comes up quite a lot at our compliance forum meetings, and does allow a process, although I know it can take quite a long time to actually get the update. But would you encourage people to do that, Inga?
Absolutely, yes. I mean, I know it's a painful process, but absolutely. Yeah. And the fact that you've done it actually, you know, shows that you're managing your business and the risks well, and it hopefully would dissuade other people from doing that.
Yeah. And I think something that's come in recent times is that Companies House will accept bulk uploads from the largest operators, where they've got a lot of these to report, won't they? So it's hopefully making it a bit easier than filling out a form for every single one.
Yeah.
Okay, well, thank you. Just hang on. Let's just do this as the last question. How often would you recommend each client be audited for both tenants and virtuals?
So the guidance states kind of periodically, you should check. You need to check them all annually. Some people will check they pick a month and they check them all. I know that, you know, at times my passport has expired, and that was the ID that I might have used somewhere, and nobody has followed up with me. So theoretically, I should provide new ID verification. If you know that something has changed about that client, if you see something in their behavior or practice, whatever you have stated in your policy, you must do. So if you say that you're going to check 5 clients a month, you need to show records that you've checked 5 clients a month. If you say you're going to check 10 clients every quarter, then again, you just need to prove that you've checked 10 clients every quarter. You can check more than that, but it's about doing whatever you have stated in your policy. And really, I would say it's best practice to try and check them all within a year. So if you do file their documents or keep a record of what months they started up, and that might be because their virtual office agreements also renew, then you could do something 3 months before the renewal, make sure that you're checking their documents. There isn't a right or wrong way, but you do need to do it so that you're managing your risk.
Okay, thank you. And just finally, just to touch on something Inga referenced in her presentation about suspicious activity reports, and one route of those is Flexa, and we have a page on our website where people in the closed area, that people that are registered can report suspicious activity. And every one of our compliance forum meetings, pretty much, trading standards or others will comment on how helpful these are, and it can often be something small that then builds up a picture of some, you know, of real criminal activity, and so they're always very grateful for these and encourage people to do that more. And we also then do share where there's if it's a client or a potential client that another operator wouldn't want to be taking on, we share that information within our membership for the people registered for that compliance information. So I would definitely encourage people that are already on that to use that system, or to get in touch if you want more information. And Elaine in our office looks after that. Well, thank you very much, Inga. That's been really, really helpful, I think. Lots of information packed in, and particularly high attendance for this webinar, which I think shows that everybody does see it as a really important issue for the running of their business. We don't currently have any further Workspace Wisdom webinars arranged, but we will be getting on to that soon. And if you've got any suggestions for topics you'd like us to cover, and really it can be anything that's relevant to the running of flexible workspace. We've covered quite a broad range over the last few years that are on our YouTube channel, but we're very keen to have ideas from people on further topics. So thank you. Thank you, Inga, again. Thank you everyone for watching. Have a good afternoon. Goodbye.
Thank you.